to the second segment in our Business of Medicine e-learning series. My name is Sean Murphy, and I have the pleasure of serving as the CEO for the Harris County Medical Society. In this video, we will be discussing things to consider when financing your practice or joining a practice. With me today is Jordan Golson, Senior Vice President of Private Banking with Amegy Bank. We also have Kristen Smith, Senior Vice President of Commercial Banking with Frost Bank. Welcome.
Thank you. Thank you.
All right, to start things off, Kristen, can you please provide us with some insights on what physicians should consider when financing their practice?
Absolutely. So starting a practice, there's going to be a couple things that you're going to have to provide, and it's going to take a little bit of work to put those together, but it's a really great exercise to do because you're going to be able to really identify all the needs that you're going to have, expense-wise, revenue-wise, and then be able to assess your personal financial situation as well. So in your business, one of the first things you'll need to provide is your business plan. In that, you should identify what your needs are. What are you going to use the funds that you're borrowing for? Where's your practice location? What does the market in that location look like? Are there competitors in that location? What are your client sources? How are you going to get referrals? What's your marketing plan? How are you going to bring in those patients? What's the nature of the practice? What's your practice management? Who are you using as maybe a CPA, as an attorney? Are you working with any consultants or any help of that type? What are your practice expenditures? Are you going to be purchasing equipment? What are your expenses going to be? Your supplies, your utility costs. We want to know about your professional background, your references, your certifications, and then which hospitals are you going to be affiliated with going forward in your practice. So all of that is really important, but so is your projections or your pro forma. And that's going to be the look of your revenues and your expenses for your practice. And so your first year should be on a monthly basis, and that's really going to be able to identify when you're going to maybe break even. So you're going to want to look at your revenues and then all the expenses that you're going to have monthly and see how those maybe grow over time. It's a very helpful exercise. It is an in-depth process and it's important to do, but it's very, very important and super helpful. Don't forget about payroll. That's a huge expense for everybody and it is a moving target. There's some expenses that are going to be fixed that you're going to know, like your rent maybe, but there's going to be variable ones and you can work with somebody to help you with those projections. The last thing is going to be your personal financial information. So that's going to include your past tax returns, maybe your bank and brokerage and retirement statements, your resume, and then the most important part is actually your personal financial statement. And so this is going to include all of the assets you have, all of the liabilities you have, and then show your net worth. So the assets are going to be your cash, any maybe retirement funds you've already had, your home if you've purchased one. But then on the liability side, it's going to be the same thing. If you have a home, we want to see your mortgage. We want to know your credit card bills. If you have any of those, we want to know your student debt. And then we'll be able to see what your net worth is. Part of that also is going to be your statement of cash flow. So we want to see what income do you have coming in and what expenses do you have going out on the personal side. So your salaries, but then also what is your rent or your mortgage expenses, any of your child payments, your personal living expenses. What are you spending on food? What are you spending on insurance? These are all really good exercises to go through to make sure you know what's your cash flow each month and what you have left over to then finance debt with your practice. And also, one note on the personal financial statement, don't forget to note any contingent liabilities. So this is going to be any loans that you have, you're a guarantor on those. Any bank is going to want to know that, so make sure that you include that in your personal financial statement as well. So as you start your practice, there are going to be different financing options that you can put in place. First is a revolving line of credit. So this is going to be used to help with any cash shortfalls you might have with your AR and then the expenses that you've got for your practice. So as a financial institution, they're going to expect this to revolve up and down. So we're going to expect you to advance it when you need it and then pay it down as you collect your AR from your patients. It's typically secured by that accounts receivable and other practice assets. And this is an interest-only loan that's put on a variable term, a variable rate. So that means that it's going to float with prime or another type of interest rate. And so there's going to be some floating interest rate risk with a revolving line of credit. An equipment loan or lease is going to be able to finance any equipment purchases that you have. And so most institutions will finance about 80 to 100% of the cost of that piece of equipment. So that means you might have to put some cash down on that. The loan will be secured by the equipment purchased, and this will be on a fixed rate with principal and interest payments. If you have multiple equipment purchases to do within a 1-year window, I would recommend that you ask about a major commitment or a lease line. This would get you credit approved from the front end for all of your equipment purchases within the year. That way, when they come up in the month and you need to purchase that equipment, you can go to your bank and say, hey, I'm ready to buy this. You can make the advance of that one piece of equipment and then have the rest of the funds remaining whenever you're ready for your other equipment purchases. Leasehold improvements are going to be used for any of the build-out costs of the space that you're occupying, and it's typically set as advancing term loans. So that means that it's going to advance at the beginning where you're going to be able to draw it as you need it. So maybe as the construction finishes, you'll be able to draw that amount to pay your contractor, and you'll only pay interest payments during that advancing time. And then it'll term out where you can pay principal and interest over an extended period of time. And those will have fixed rate options available for those types of loans. Real estate, there's a difference between owner occupied and investor occupied or investor properties. So you'll want to talk to your institution and see what they consider owner occupied versus investor. There's going to be different loan options and different interest rate options for both of those products. But they're going to be on principal and interest payments, and they're going to have longer terms and amortization than a leasehold improvement loan. The last is a credit card. So this is good for small monthly expenses that you might have. Some cards even offer cash back. So as you're paying for those supplies and those expenses for your practice, you'll be able to actually earn cash and maybe pay it down, and you'll just have the minimum interest payments on those credit cards.
That's great. So part of my understanding is as you put together your business plan and talk to your banker about what your needs are, you can figure out exactly which ones of these loans are best for you and your practice, and then how to move forward.
Absolutely.
When talking about these loans, is it ever recommended to get loans from different banks for these, different purposes, or do you kind of want to house all your loans with one bank?
So it's always recommended to kind of stay within the same institution. Typically, they're going to take a lien of collateral of the practice, and so it can get a little hard for institutions to work together because they might have blanket liens on all of the assets of the practice.
Sure.
Yeah.
Okay.
Well, and I think I would add too that it's important you have a bank and a banker that kind of knows the full relationship of everything that you have.
Sure.
It's a lot easier to have a conversation that, hey, I need equipment, I'm purchasing new equipment. I know you helped me with the old equipment, now I need to kind of revamp.
Yeah.
It's much easier to have those conversations with somebody who's helped you before than somebody that's brand new to the picture.
Absolutely. And they're going to have your financial information. It's going to be a smoother, quicker process for you if they've already helped you with a loan before.
Yeah.
Makes sense.
So just like your practice is going to have financing needs, you're going to have banking needs as well. So you're going to need a checking account, and it's important to check what the bank is offering in terms of their services with a checking account. Everybody really enjoys having the mobile abilities and online banking, so most institutions have that, but definitely take a look at their website and get more information, or go and talk to a banker about it. And most of them have a minimum balance requirement so that you can actually waive that monthly service charge, so check into that as well. Another thing is merchant services. So this is to aid in your ability of taking credit card payments from your patients. And so there's tons of merchant service providers all across the US. Some of them actually partner with your electronic medical record or any of your software that you use. And so you could utilize those. Sometimes it's beneficial to use an external merchant provider. They can get better rates, and it's just always good to get multiple quotes when you're looking at a merchant service provider. Fraud prevention is super important. It's always been important, but fraud is absolutely rampant right now in a lot of different ways. It's not just check fraud, but it's also ransomware and phishing scams and debit card fraud. So please make sure to talk with your banker and put some fixes in place from the start. It's so much easier to do it from the start and to protect yourself from the start than come to your bank and say, somebody took money from my account, and it's just, you don't want to get put in that position.
Let me ask this: when it comes to joining a practice or purchasing your own, what would you recommend kind of that analysis involve if someone's dealt with that consideration?
Yeah, so joining a practice and purchasing a practice, two very different things, right? So purchasing an existing practice, there's a lot of benefits that can be associated with that. You've got all of the equipment purchases already done, you've got staff, you've got maybe a patient base to pull from, but then you also, on the flip side, if you have a patient base that's liked that doctor that has been there and now you're going to be the new doctor and you've never been there, are they going to want to stay with you, or are you going to have to try to keep them on? So sometimes what I've seen a lot is that a doctor actually works for a practice that might be thinking about selling down the road. You make time, you're in that office with that doctor,
Sure.
and then you've earned that trust of that doctor, and maybe they want to sell it to you down the road, and then you've already met the patients, and it's a really good transition and really helpful in that way. The costs of starting a practice and buying a practice are probably pretty similar, honestly, in terms of the debt that you need. But sometimes when you're buying an existing, there might be processes and things in place that you didn't like or that you'd want to change. And so sometimes starting your own, you can do it exactly everything that you want, exactly how you want it.
Great. All right. Well, thank you, Kristen, for doing such a good job of telling us how to start or join a practice. With that in mind, just a couple general questions I'll ask the panel here, if you will. First off, I mean, this can kind of seem daunting as far as where you start. So when you decide that you either want to join a practice and that's going to require financial commitment, or you're going to start your own, where do you start doing the research to find out even what banks to begin talking to?
Well, I think you can Google, honestly. I think you can Google healthcare bank. I'm sure Kristen's name pops up, my name pops up. You know,
Sure.
There's plenty of banks in the area that specialize in working with physicians and physician-owned practices. Houston being what it is, with the largest medical community in the world, the banks around here want to bank healthcare. So that is where I would start. And then you can also kind of ask colleagues that you work with,
Sure.
people you may know, and just see if they have referrals that they'd be able to offer to you for bankers or banks that they've worked with in the past. That might be a kind of another place to start as well.
Great. Kristen, anything to add, or is
No,
that
those are
pretty much
great
covered?
things. I mean, the Harris County Medical Society, I think, is a great place to start too.
Sure. Yeah, we have friends of the society that are specifically in this industry. So yeah, definitely a great place to start as well. What would you say other things to consider when you're opening a practice that maybe we haven't discussed during your brief presentation? What are other things that should be thought of?
I think maybe having the right partners. You know, we talked about having to come up with projections and a lot of financial information, so making sure you've got a good CPA that understands the healthcare industry,
Sure.
but also maybe an attorney as well if you need to draft any documents. If you're going into a partnership with somebody else and you're both starting the practice together, or a group of you, making sure you've kind of got the entity lined out, ownership, etc. That might be something else to consider as well.
Absolutely. Yeah, that's great. And just, we alluded to it at the beginning with the equipment financing and the different options with the loans, but the bank relationship's really important. You're going to want to find a bank or any institution that's going to really be a partner for you going forward. You know, you want to have that relationship with that person, and you're going to want to work with them, and you're going to want to be able to come to them not only in the good times, but maybe in the bad times. Should you have some low points in your practice, you're not going to want to be scared to talk to your bank. The bank wants to help you, believe me. We might seem scary, but we do want to help our clients. So it's better if we have a working relationship and communication.
So I think the last question I have to ask, because I'm sure it's on a lot of physicians' minds that might be watching this series, especially if they're a younger physician, is they may be looking for a banking relationship knowing they have a significant amount of debt, personal debt, whether it's student debt, whether they just bought a house. How is that taken into account when they're potentially looking to join or start their own practice and get financing for that?
Well, I think you kind of said it in your initial question there. I think having that relationship with the bank and with the banker, and having them be able to understand what is on your balance sheet. If you're applying for a mortgage, there's really no escaping the liabilities on your balance sheet. It's there, and it is included in the payments. But if you're working with the banker to start a practice or join a practice, and you're looking at a buy-in loan or financing equipment, setting up a line, whatever it may be, I think that banker, if you've got that relationship, can really kind of look at your overall picture, understand where you're going, your true goals for what you're looking to do, and kind of set aside maybe that student debt piece, knowing that that's going to continue to get paid down and paid off as you continue to increase your earnings year after year.
Great.
Absolutely. So yeah, that relationship's so important. Having that communication, being upfront about the level of debt that you have. Perhaps, too, another thing to consider is possibly a guarantor that could be on the note with you. They could help lower that burden on you and your debt, and they can help add to that cash flow for repayment. And then over time, the bank might release that guarantor as the practice or you make more money to stand on your own.
Yeah, and of course, every situation's different, so we can't make a
Absolutely.
blanket statement. But if someone has significant student debt, it shouldn't at all scare them from at least having the conversation with their
Right.
banker, especially if they have a great banking relationship,
Absolutely.
about, look, I'm interested in starting my own practice, or I'm interested in becoming a partner of a practice. How do we
Sure.
make that happen?
Sure. Yeah. Start that relationship, open that account, start getting to know your banker, and over time they can guide you and help be an advisor for you too.
Great. Well, Kristen, thank you for the great information.
Sure.
Thank you.